FTX, the crypto exchange that collapsed a year ago, is suing the parents of founder Sam Bankman-Fried. The lawsuit accuses the parents of fraudulently transferring and misappropriating millions of dollars of company funds for their own personal gain. They allegedly used that money to buy gifts for friends, go on expensive trips, and even donate to their own Democratic super PAC. Mr. Bankman and Mrs. Fried are both tenured professors at Stanford Law School. In response to the suit, their lawyers issued a joint statement saying this was a, quote, dangerous attempt to undermine the jury process just days before their child's trial begins. Scott, it's been a long time since we discussed FTX and crypto for that matter. We obviously can't draw any conclusions from a pending investigation, but did you have any general initial reactions to this?
I just love this. I think it's hilarious. I remember being at Andrew Ross Sorkin's in the New York Times Dealbook Conference, which is an outstanding conference, and Sam Bankman-Fried was doing this. Oh, I just fell out of bed and slipped onto and fell on a bunch of, felony theft over and over and over again. I remember thinking, and I remember Bill Ackman saying, "I believe you," and I'm like, "This guy's." I'm not revising history. I'm like, "This guy's going to jail," and clearly everyone is turning on him. And now it looks like his parents are in deep water. My favorite email they've uncovered in Discovery is that his father was pissed off that he was going to get less than $1 million a year, and so he CC'd Sam's mother on the email chain, writing, open quote, "Gee, Sam, I don't know what to say here. Putting your mom on this." I mean, that's pulling out the big gun. When you're not paying dad 7 figures and he gets really pissed off, he CC's mom. I mean, I'll tell you, I'm telling you this, that is really, as someone, because you're not married yet, let me just tell you, that describes pretty much every family dynamic perfectly. Like, you do not want to bring mom, when you want to pull the big guns out, you bring in mom. But we're talking about a 31-year-old here, and the standard definition of a child is under 18. People are pissed off. This is, I mean, I don't even know. This thing is going to come and go. I think crypto is going to come and go so fast that other than what Michael Lewis is doing on Sam Bankman-Fried and the one, Apple original scripted series will be there. I think that all of this is going to be kind of a trivia question at this point. I'm not even sure it's worth. It's like business porn, but I just think these folks got so caught up in making money without thinking that they were above the law, and that, oh no, this is innovation, not fraud. Oh no, this is crypto, not a Ponzi scheme. It's like that movie with Matthew Broderick and Sean Connery and Dustin Hoffman called A Family Business, where they're all criminals. It's the whole thing's beginning to smell. You used to feel really sorry for the parents, and now you're like, oh wait, maybe the parents are the problem.
Yeah. And then the other news on FTX is that this is the final week for FTX's creditors to submit a claim to get their money back. Obviously, FTX went into bankruptcy last year. So far, $16 billion worth of customer claims have been filed. Only about 10% of them have been resolved. But more importantly, when we discussed this yesterday, Scott, you casually dropped that you've spent, $1 million buying those claims? So could you give us the full rundown on that investing strategy, which I find fascinating?
Yeah, so this is not investment advice.
Okay.
But I'm just, part of this program is we want to be transparent. I find that the majority of people on financial news telling you what to do just are totally opaque as to what they are actually doing. So, and see above, I invested in the Oddity IPO, and when it ran to 55, I thought, I'm going to hold on because I like to be a long-term investor, and I'm sitting here and it's at 27. That's okay. Anyways, I feel good about the company. So, but I like the idea of running into the fire, and I have made good money in what you would call distressed assets. I do not own a single coin of crypto. I'm on the board of Ledger.
You never have, right?
What's that?
You never have.
No,
right?
I've never purchased a coin. I'm on the board of Ledger because I wanted to learn more about crypto. They're doing a great job. They're coming out with what I think will be sort of the Apple of digital storage called Stacks. But I'm a crypto bear, and I think the evidence shows that that's true. However, you can go out now. So FTX has gone bankrupt, and now it's up to the court administrator to try and uncover all of the different assets hidden everywhere. As a matter of fact, I think that one of the co-founders had $1 billion, and the court administrator is going to get that back or claw that back. And then once they claw it all back, they pay their lawyers 100 or 200 million, and then they distribute it based on your ownership and based on where you are in the capital structure, et cetera. And I was approached by someone who said, I think this is a great investment opportunity, and you can buy claims for about 25 cents on the dollar. So I've been buying claims against FTX and Celsius for about 25 or 27 cents on the dollar, thinking that
And
when all is said and
describe
done,
describe what that actually means, buying the claim, because it's kind of a
sure,
strange like derivative concept.
sure. So the company goes bankrupt. It had
Yeah,
$1 million of it was a it was a brokerage technically or an exchange, and they had $1
yeah,
million of my money, and they go bankrupt, and I have no access to it. I have technically $1 million claim against FTX.
hmm
And now that it's bankrupt, a court administrator is appointed, and they will go in and find out what assets are there. And if the total claims add up to 10 billion and they can find 5 billion in assets, they will then distribute 50 cents on the dollar to all the claimants. Now it's more nuanced on that based on certain claimants have priority over others, et cetera.
yeah,
But effectively, a claim is worth something unless the company has no assets. And this is a company that has a ton of coins, it has cash, it has investments. I mean, for example, I believe they own. I think they own some of it. Is it either Nvidia? I forget what they own. They own some hot. They co-invested in Sequoia and some companies. So
yeah. They have a
there's
big venture
assets.
portfolio. Yeah,
Yeah, there's assets. They have a whole venture capital portfolio. There's assets at FTX, cash, coins, all sorts of shit. So, for example, they have an ownership stake in Anthropic, which is going to likely be worth a lot given the mania around AI.
yeah,
So, anyways, the point is, people don't like these things stink as they should. They really have a foul stench to them. People don't want to wait for 2 or 3 years for the court administrator to work through all of this and then distribute the funds. And people are running from the fire. I like this a lot. So I just bought a claim. I think there was originally $1 million claim against FTX, and I bought it, I think, for $270,000. And I'm willing. You want to play to your strengths. What I'm willing to go illiquid. That's going to be hard to resell. I'm
yeah.
willing to wait. I have no needs. I can go illiquid. I have a long-term time horizon. This is something that requires both, which usually connotes a higher return. And I'm thinking, and it's easy to think this way, but I'm thinking I'll get 50 or 60 cents on the dollar for and I bought these claims at about 25 or 27 cents. So
Yeah.
I am buying claims against bankrupt
Yeah.
crypto platforms.
Whose claim is that? Like, where do you find someone who's got $1 million claim against
Oh,
FTX?
they're everywhere. A hedge fund invested $1 million or put $1 million in there because it was buying coins, or I mean, think about it. This company was doing billions in transaction and had
Mhm.
all kinds of money flowing through it, and all kinds of people it was a custodian for coins, and people were investing. And then there was Alameda, which was I guess a hedge fund, so people were investing in that. So there was it's like if Charles Schwab went out of business tomorrow, a lot of people would have a claim against Charles Schwab.
And how do you find that? Did you have, was it the advisor who came to you and said, "Hey, I'm doing this claims operation"? Like, how do you find the guy who has the claim?
I heard about him. He's a really talented guy. He's out of Italy, kind of a lifestyle
Okay.
guy, but he's worked at hedge funds before, and this is all he does is he tries to track down and reach out to claimants and ask
Yeah.
them if they're interested in selling their claim. And I think there's a pretty active market in it. Again, it's sort of the secondary market. And the market, there's some price discovery, and you find that, okay, claims against FTX of this type of claim are worth between X and Y. He makes an
Yeah.
offer, and then he calls me and he says, are you interested in buying this $1 million claim for $270,000? And I say yes.
Yes.
So,
Yeah.
but anyways, yeah, I'm making investments. I'm buying claims
Yeah.
against FTX right now.
Yeah. I think looking at the court filing, there was some interesting statistics. Basically, the court has recovered $7 billion worth of assets, and $2.6 billion of that is cash. They also have $0.2 billion in real estate. They have this massive real estate portfolio in the Bahamas, and then $3.5 billion is in crypto. And it's interesting. The bankruptcy lawyers say that the crypto assets are, quote, category A, which basically means it's liquid, it's secure. And I sort of assumed, okay, that probably means that they have a bunch of Bitcoin and Ethereum. But then I looked at the actual court filing, and actually, Bitcoin and Ethereum only account for 20% of that pool of category A assets, which are supposedly liquid. The rest are all these coins you've never heard of, like XRP coin, APT coin, Tether coin, just crazy coins. In other words, you've got $2.5 billion worth of tokens that, in my view, are not liquid at all. Because if you tried to sell $2.5 billion worth of XRP token, whatever that is, you'd completely tank the price because there's just not enough out there. So I think what will be interesting to look at as this trade unfolds for you is how are they actually going to sell all of those tokens? Because they can't do it all in one go. They're going to have to probably do some savvy method, selling the stakes in little slices over time so that they don't tank the price of those tokens and lose out on the investment. So I think that'll be an interesting thing to watch out for.